What are you anticipating from Didi?
Yeah, I'm expecting a very good IPO reception, IPO debut. I mean, you're seeing the largest ride-sharing company in the largest market in the world, in the second biggest economy of the world. So I think this is a lot of big stuff going on here. So I think this is going to be a big day. But more than that, this is a company that's really executing very well. Tremendous tailwind behind it. There's rapid urbanization going on, the secular wind, the rising middle class, and the restrictions on driving, the density and all that stuff. So I think all that tailwind helps the company, and they're executing very well, and tremendous growth opportunity ahead.
Obviously, American investors are going to look at Uber and say, okay, how is this different than just Uber? This is a ride-hailing company like an Uber. They want to do more things. Their plan is to do more things, Santosh, but do we value them like an Uber? How are they different? How are they the same?
Yeah, I think it's more than Uber. It's very well funded. Plus, it is a global play. And they're growing beyond that. Right now, 90% of their business is really coming from China. Only 2% is outside. So I think they have a lot of tremendous demand out there. So I think Uber is also great, but this is 4 times bigger in terms of volume of business and everything. They're vertically integrated. They're in much more businesses. There's optionality to go into other areas as well. So I think this is Uber plus more. I think that's how you can see it. And plus, they have very little competition, not because they're doing anything unfair. It's just that they outbid the others. And they survived. They spent a lot of money, established themselves. And in the outer areas, beyond tier 2 and tier 1 and tier 2, where they dominate, there's tremendous competition out there. So I think they need to grow there. So there's no monopoly issue there. So I think in that sense, I don't think the regulatory risk is that much.
Okay, because Uber has hardly burned up the charts. I mean, it's going back to its IPO, Santosh. Of course, we had this thing you might have heard about called the global pandemic and lockdowns. But overall, Uber has not made investors a lot of money. In fact, I'm not sure there's been any company in the world that has burned through more cash. I mean, losing billions a quarter than Uber. Now, investors haven't cared as much. Does Didi have a better path to profitability? Does it have a path to profitability?
Yes, they have a path to profitability. I think by 2023 at the earliest, or late 2022, they should be EBITDA positive based on my projections and numbers, and based on many numbers. So they definitely have a path to profitability. They're executing very well, and I think it's much different from Uber. They're just bigger in many respects, but don't expect the stock to just run off. There are issues, just like Uber is. Ride-hailing business is still in its infancy. The penetration is still low. The adoption is still low, despite the popularity. So they still have a long way to go. They still need to spend a lot to change minds, and it's going to take some time. So you're going to see some volatility in the stock. It's going to pull back. There's some regulatory headwinds out there. So I think there are a lot of issues out there. But in the end, it's a long-term play. Near term, you're going to see a lot of volatility. But in the long term, you need to have it in your portfolio. It's a big cap play, just like the other big cap plays in China. It's a great way to participate in the second largest economy of the world.